Hi everyone, it's June, and summer is finally here in the Twin Cities. I mean, you can tell by all the road construction detours. Kidding, not so much kidding. Temps have started to climb, and the housing market is at least up to a summer simmer. Last month we saw continued growth in the number of new homes listed for sale, but we also saw an increase in the overall number of homes for sale. So more homes coming to market, but also more homes staying on the market. And home prices remained pretty much steady. Wondering what all this means if you're considering buying or selling this summer? I take a deeper dive into the numbers in a moment. In the second half of this video, I'm going to have a little bit of a tough love conversation about interest rates and whether it's time to consider that where we are now is really our new normal. If you haven't met me yet, welcome. My name is J. Trout Lowen. I'm a realtor in Minneapolis, and I help home buyers and home sellers navigate the ins and outs of the Twin Cities housing market. Now, if you like what you see here, go ahead and hit that subscribe button. Looking for something more specific to your neighborhood or your community? I'm happy to do a customized market report, I can say that, just for you. Now let's get back to the numbers. So in May in the 7-county Twin Cities metro, we did see a bit of an increase in the number of new homes listed for sale. The number of new homes listings jumped from 5,340 in April to 5,861 in May. Now that was an increase of about 3.7% over May of last year, so we are trending in a good direction. Now the bulk of those new listings were in the move-up and luxury buyer brackets, however. The $500,000 to $800,000 price range saw a 10% jump in the number of new listings compared to the previous year. And new listings priced over $800,000 increased by more than 5%. So in contrast, new listings in the $300,000 to $500,000 price bracket grew only about 2%. And new listings priced under $300,000, where that affordability is, they were essentially flat year over year. So lower income buyers have continuing to have a tough time out there. Overall, while the number of new listings grew in May, the market is still somewhat subdued. Let's take a quick look at this graphic showing new home listings in the month of May from 2019 to 2024. Look at this, you can see that last month was still below pandemic years, and check out May 2019. That month saw an almost 8,000 new listings hit the market. Yowzer. All right, let's talk about the total number of homes for sale. This is where we really start to see the impact of interest rates on the market, at least that's what I think. In May, we saw the total number of homes for sale grow by about 500 from April, but year over year, the total number of homes for sale was up in May by about 1,000. Now, that's an increase of about 17%. And here's something I think is kind of telling about affordability. The overall number of homes for sale in May in the under $300,000 price bracket was 27% higher than the same month last year. Now, that supply didn't really increase, so it shows that buyers in that affordable price bracket may have more to choose from, but they still can't afford to buy because interest rates are high. Even with somewhat more inventory on the market, homeowners are still getting 100% of their asking price, however, and this is still considered a seller's market. Homes are selling a little more slowly though. The median number of days to sale was 14 in May, up a couple of days from the previous May. However, once again, we're seeing something different in that affordability price bracket range. Median days to sale in the under $300,000 price bracket was 20. Again, homes are staying on the market longer, there's more homes on the market, but buyers are still having a tough time buying because of the interest rates. The other area where sales are sluggish is condos. Median days to sale for condos is 30, and that's up 10 days from May of last year. So what about home prices? There's not really much to report here. The median sale price in the metro was $375,000, and that's unchanged from April. And it's up about 2.7% from May of last year when it was $365,000. Now the average sale price is just a sliver under $450,000, and that's up about 3.3% from last year. So prices are rising, but kind of slowly. So it's time to talk about interest rates. I want to ask, how many months do you think it takes before we can say what we have reached is a new normal with regard to mortgage interest rates? The interest rate on a 30-year fixed mortgage has been at or above 6% since September of 2022 and above 6.5% since May of last year. Folks, if you are waiting for interest rates to drop below 6% or maybe even hoping to see something around 5% before you decide to buy or sell, I think you're going to be waiting quite a long time. I mean, I get it. From September 2009 to April 2022, you could get a 30-year mortgage with an interest rate of 5% or less. That's 12 plus years of really great interest rates. And a lot of people have come to think of that as normal. But I have to say, after looking at the data for the past 21 months, I think 6 to 7% is really our new normal. So why do I say that? Because if you look at the interest rates before 2009, you'll see that from 1971 to 2009, so for almost 40 years, interest rates were on a 30-year fixed rate mortgage were above 5% for most of that time, and they were also above 6%. So if you're looking at the historical data, that 12-year period of low interest rates is really the aberration, and our new normal is really more like our old normal. Okay, that's what I have for you this month. Thanks so much for watching, and I will see you in July.